The lingering effects of inflation just don't seem to go away. And people are concerned. I've heard it from clients. They're concerned about the long term impact on their portfolio. So that's what we're going to talk today about on Friends Talk Financial Planning. I'm Bridget Sullivan Morrell, and I've got a fee-only financial planning practice in Chicago, Illinois.
And I'm John Shear. I've got a fee-only financial planning practice in Middleton, Wisconsin. Before we dig into the impact of inflation on our portfolios, I just want to remind all the viewers, hit that subscribe button. Help other people find this information on YouTube. And with that, I'm excited to jump into this topic, Bridget. I've been hearing some similar things from clients, just not really worry necessarily, but it's this thing like, hey, inflation kind of hasn't gone away. We're expecting, rates to go down. They really haven't. And like, how is this going to impact our portfolio, right? Like, what do we do about it? And I know some of the things that I say, but I'm really interested to hear what you have to say, what you talk with your clients about and how you communicate this. So when it comes up for you guys, what are you guys thinking about? What are you talking about with folks?
Well, first of all, I think that people are mistaking the hangover for the drinking.
Interesting.
Okay. Right now, I feel like we're having the hangover and we feel like we're in the drinking because we are not as in high inflationary period, but people just are still seeing all those prices that are really not going to ever go down again unless we have deflation, which we don't want. If you know much about deflation, you don't want that. So it's just taking people a while to adjust to the new levels. And still, inflation is higher than what the Fed wants. And obviously, it's higher in certain segments of the economy. So I think that it's just taking people a while to adjust to the new reality. And then I also think that different segments, different age groups, I know I am 60, and when I was a kid, we had inflation. And so it wasn't, I know what it was like, and so it's not the end of the world to me. The way it is like a new experience to a lot of people that are younger than me. So that's part of it too. So there's a few things going on there. So we talk about that. And then we get into, well, what are the actual facts? Okay, so we want to process the feelings and what might be going on an emotional level and recognize, say hi to our inner reptile and say, hey, how you doing? But let's get back into our logical brain a little bit with investing, because that certainly helps. So then it's helpful to actually take a look at, we've got a article from Dimensional about that shows, okay, here's what inflation really is. And those are the red dots on this and the little red sticks with the dot. Shows what inflation is every 2 years or every year. And then it has market returns. Okay.
Yeah.
And so this is telling a different story. What are your thoughts, John?
Yeah, interesting. I was hoping you're going to tell me what story you see in this, because it's first of all, I love the idea of looking at the facts, right? Inflation, to me, it can be kind of the boogeyman for folks, and you go, oh, inflation kicks in, and like we're supposed to be afraid of it, sort of a feeling, right? And when we haven't had inflation, in meaningful format for 20 years, sort of a thing, and now suddenly it kicks back in the last few years, it's sort of this disorienting feeling to compared to, as you said, when we were growing up and had these sort of things. And so I love just seeing the data on here. And as I look at this, and I so appreciate you bringing this up. I'd kind of forgotten about this slide. Is you take a look at where those inflation dots are, right? And and you can say there's some of them looks like they approach 5% in previous years, but of course the last couple of years up, pretty high in inflation. And I like to talk about patterns and more specifically the lack of patterns. We want there to be an explanation for all the things that go on, right? That's human nature, maybe that reptilian brain you're talking about. And the reality is a lot of these things just don't connect. So as I look at this, what I see in there is, geez, when there's periods of really low inflation, some years in the stock market are really good. And when there's periods of low inflation, some years in the stock market are really bad. And I look at those two really high years of inflation here, right? And you go, boy, sometimes when there's really high inflation, the stock market's really good. And then other times, 50% of the time it's bad. And there are 2 year sample size, right? But, and
Right.
I, jokingly say that, but the idea is like, listen, is there a connection? Not necessarily, and certainly not based on this information here. Maybe there's some other things, right? There's other things that go into all the things that we discuss, both on our show and with clients, right? There's no one thing, inflation and this and boom, right? It's not exactly how it works. But is it a factor? Yes. Is it the factor and the thing that we need to be sort of scared or take some action on? And man, I just don't see it in the data and in the graphic that we're looking at.
Yeah, and I think if we look at the in the column to the right, the third point I think is very important. Over the period charted, the S&P 500 posted an annualized return of 7.5% after adjusting for inflation. Okay. So, and again, and actually this whole chart is real return, which means after inflation.
Yeah.
So that's like even after inflation, inflation might make the return sound better. Like, let's say in 2021, inflation might have made the returns look better, right? Because but the total return amount, but generally we're talking about 7.5%, which that's again back to, let's pull back the curtain and talk about the facts.
Yeah, yeah. And at
Yeah,
7% net real return. So after inflation, that means your money
right.
in today's dollars doubles every 10 years. And you think about that from a big picture planning standpoint, you go, well, that's pretty, leads to a lot of success in our financial plans. The other thing, and just in looking at this, that it reminds me of, and this is, and one of the things that we do talk about with clients all the time is, the one of the biggest ways I think to offset inflation or to be prepared for it. And I want to be clear that when we're talking about these things, it's not. Oh, here's what we think is going to happen. We're going to see inflation, so let's shift to this or let's shift to that. That's not how it works. But owning stocks, that part, and when I say owning stocks, of course, in mutual funds or ETFs and a diversified portfolio, but companies can adjust to inflation a lot more efficiently than most of our other investment things can. And what I mean by that is, and we've seen it the last couple of years, unfortunately, at the grocery stores, right? And at the, different places where you buy things, that it costs more, right? But when inflation comes in, it's not like McDonald's says, well, geez, our cost of our, supplies is a lot bigger. I guess we're going to make less profits. What happens? Prices go up, right? So the companies can be much more responsive to inflation to keep their profits, at the level that they want to keep them at, right? So they've got a lot of ability to adjust. Of course, they've got to balance that with, I raise prices too high, nobody's going to buy my Big Macs or my widgets, right? But we can adjust when the price of my supplies goes up 50%. I don't just simply eat all that, strategically over time. I go, okay, prices have to go up so I can be profitable at a business. Other things, you can't necessarily do that in other places, or it's not as evident from an investment standpoint. So having money invested on that stock side of our portfolio actually protects us against inflation in the long run from a strategic standpoint, I think.
Yeah, and the other thing is that if you look at the different market segments and slice and dice a little bit, we've got another
Yeah.
slide here. We put it in at the end because we feel like it's a little less important than the first message that we're giving, but different parts of the stock market do a little bit differently in inflation. And I would not say, okay, if you think there's going to be more inflation, change now to these, because you're late to the game.
Yeah.
But this is a case for diversification. So the wide range of stocks, sectors, et cetera, matter. But then you can see, so recently there's a value stocks, and they've had a not that great of a run for a period of time. But that's generally value stocks do better during inflation, and we always incorporate those in our portfolio. We actually tilted a little bit toward value for a variety of reasons, and actually inflation not being one of the biggest. Yeah, I would not say our value tilt is because of inflation, but as a nice benefit that might help us. Maybe it'll help. I don't know. We
Right.
can't say. We don't have we don't know how it's going to work this time.
Right.
Uh, so I think that's a great place to wrap it up, John. I'm Bridget Sullivan Mermel. I've got a family financial planning practice in Chicago, Illinois.
And I'm John Shear. I've got a fee-only financial planning practice in Middleton, Wisconsin. Both Bridget and I are taking on new clients, but we're also both members of the Alliance of Comprehensive Planners. So if you like what you hear on our show and are interested in finding a planner that thinks similarly in your area, you can check out acplanners.org.
Help us get to 1,000 subscribers. Please subscribe.